Welcome to my morning report on Friday, the 11th of September, with me, Rich Perry, market analyst at Tech Markets. European trading sessions fairly mixed actually, with a slight sort of risk-off sentiment developing as we've come in the early trading. We've pretty much given a neutral handover from Wall Street and also Asian markets. No real sort of significant direction being given, but there's a slight air of negativity, very slight, not too significant, that we've got at the moment. No major driver behind it. Slight decline on the oil price could be, and it could be one of the reasons that the oil price has been sort of consolidating in this triangle recently, the last couple of weeks really, but there is certainly a downtrend going on there within that consolidation, so making that triangle. And the oil price has been a bit of a barometer certainly for market sentiment recently, and so we're about 1.8% down on WTI at the moment, so that's sort of pulling sentiment slightly lower. But there's no real driver other than that. That's sort of risk-off sentiment is being reflected in the slight strengthening of dollar yen, of the yen, and also the euro as well. Much beyond that, we're fairly neutral. My chart today is the Aussie, and I'm going to talk about that in a bit, and it's slightly weaker, but there is a base pattern in process, and it could be an opportunity to possibly even buy the Aussie, certainly on a technical basis. So we'll see how that goes. But at the moment, the US dollar is sort of consolidating its move. Yesterday it was weaker. Yesterday, obviously, there was a big move higher on the euro yesterday, so that pulled the US dollar lower. In terms of Treasury markets, bond markets, the Treasury yields are sort of again settled really, no significant move. That's the 10-year, and even on the 2-year it's slightly settled as well. So no significant direction really given across these markets yet today. There's a little bit of data out this afternoon. Nothing really out of the European session. So we're looking towards the PPI for the States, the Producer Prices Index, factory gate inflation, in other words. And the core data is expected to slightly increase from 0.6 to 0.7. But as you can see on this chart, still nothing really in terms of inflation coming through there on that front. Michigan sentiment is at 3 o'clock, with the flash reading expected to be 91.2, which is annoyingly the Reuters chart never really gives you the flash reading from last month as opposed to the final reading. The final reading was 91.9, so that would be slightly lower again. Third month in a row that would be lower on the day, on the month. So let me go to my chart of the day, which is the Aussie dollar. And as I said, we've got this slight base pattern that we've got playing out in the Aussie, which could well now signal a bit of a recovery. Now, the Aussie is in recovery mode anyway. Looking at the momentum indicators, the stochastics have given a confirmed buy signal near term. MACD lines are crossing over. Emphasis on the crossing as opposed to having crossed. RSI is unwinding as well. RSI tends to get towards that sort of mid-50s point, doesn't it? Early to mid-50s, and it's sort of around 40 at the moment, so there is room for this unwind. And what I'm expecting is this move to unwind back towards that downtrend. I think that would be perfectly possible. That downtrend today coming in around the 71.80 mark. So that is what we're looking at here. But yesterday we've had what actually amounts to a bit of a head and shoulders reversal pattern on the hourly chart. Let me show you. Here we go. Head and shoulders reversal on this hourly chart. Breaking out above 70.50 yesterday. Slight dip back towards that neckline support. Let me just zoom in. You can see that a little bit better. So you're back into sort of support territory now, sort of between. Get the crosshairs going here. There's a pretty decent sort of line of support, you can argue, from this old congestion around 69.90, between 69.90 and 70.50, so 60 pips worth. You wouldn't want to go below 69.90, I don't think. If that were to happen, I think that you're then certainly losing the upside impetus. Slightly just unwinding some of that overbought tendency yesterday. and you'd want to be seeing the support coming in around these sort of levels, around the neckline support at the sort of 70.40 to 70.50 level. It's just dipping below there at the moment, but you wouldn't want it to go much below that, as certainly not below 76.90, and if it did that, as I said, it sort of would be losing momentum in that recovery. But there is a small base pattern, gives us an upside target of back towards sort of 72, sort of 72.50 area, I think it is. Let's measure it. It's 70.50 down towards 68.90. So yeah, not around about that 72.50 area. So the bear market rallies, remember, tend to undershoot their upside targets. So I still think that that is perfectly possible. A rally towards that downtrend around 71.80 could easily be seen if the bulls do maintain control of this. Slightly lower today, about 20 or 30 pips. It needs to hold on around about this level, I think, for the recovery to continue. So I wish you good luck in your trading on the Aussie today, and I'll speak to you later.